In today's video, I'm breaking down the two stocks that I'm looking to increase my position size on, why they're in the perfect position to move, and how you can play them for maximum upside. And I think you're really gonna like what I have for you. If you're new here, welcome. My name is Ace Hunley, and I like to share financial strategies to help you improve your situation. So if you like that, be sure to hit the subscribe button so you don't miss out on future content. Before we get into it, there's three core things that will dominate in 2025. Number one, companies that offer cybersecurity, especially with all the aggressive hacking that's been taking place lately. Number two, companies that are applying artificial intelligence and have real use cases. Number three, companies that offer next-gen computing to handle the AI. Now, let's get into the two stocks that are set to explode in the next 90 days and beyond. Number one, ticker symbol SOFI. That's right, SoFi Technologies. Think of them as a new age bank. They're not branch focused like the other old-fashioned banks like Bank of America. They're digital focused first and are super successful at capturing the millennial and Gen Z generations. I think they're the most well-positioned bank to end up capturing Gen Alpha as well, which is people born after 2010. Additionally, they are a fintech play, which just means they're going to be incredibly asset-light compared to the traditional counterparts, which ultimately, in my opinion, is going to make SoFi far more profitable and put the business model into far better margin than these traditional banks. As we take a look at the revenue for SoFi, we can see that it's actually increasing year after year. Is that not a masterpiece right there? I mean, it is beautiful, especially considering the banking system has been a little bit of a mess the past few years. The reason being is the Federal Reserve System has raised rates at one of the fastest rates that we've seen in a long time. And yet SoFi has weathered the storm. Additionally, this is where we're at right now on earnings per share. The flip has happened. The flip is when a company goes from massive losses to finally being profitable. That has now happened for SoFi. Now, the question around SoFi is, how profitable can the company get? How many billions can they start making per year? Now, here's where SoFi is headed long term, in my opinion. As long as CEO Anthony Noto keeps leading this company for the next 10 to 20 years and gets them through any storms such as recessions and those sorts of things. Because you got to understand, the banking system, a lot of it is just getting through ugly times, getting through those recessions, and getting out to the good times and acquiring assets for pennies on the dollar when they go bankrupt because they couldn't handle the storms in the banking space. And that's why if you look at companies like Bank of America and you look at their gigantic status, that's how they got there. They just found ways to handle the storms. And when other banks went under, when there was financial crisis, when you had recessions, they were able to pick up those assets for pennies on the dollar and get bigger and stronger and stronger. And that's why we have a banking system that a lot of people might call too big to fail. The feds won't even let these guys fail because they're so big and so powerful. And that's where I can see SoFi going over the next 10 to 20 years and getting to this sort of list where they are a several $100 billion market cap company, which is a long way from where they are at today. Last time I checked, they're a little over $16 billion market cap. So you can just see the potential that's there as I see them being worth a few $100 billion in the next 10 to 20 years. What makes SoFi really unique is its innovation first mentality that's allowing it to disrupt the market as a mid-sized bank. If you look at companies like Bank of America, they're not innovating at all. SoFi is actually disrupting the market and making these banks look like dinosaurs. SoFi stock offers a really good risk to reward ratio. In the next 12 months, I see this stock being worth at least $20 a share. In the next 24 to 36 months, I see this stock floating all the way to $40 a share or higher. This stock has a lot of potential because by combining technology payments and banking business into one agile system, SoFi is challenging the standard business structure. Additionally, SoFi is set to benefit from falling interest rates, a very favorable regulatory environment, and tax reform, which enhances its competitive advantage. This is a very similar stock to Palantir before Palantir blew up, which brings us to our next stock set to really explode even further. So let's talk about Palantir, ticker symbol PLTR. If you've been following the trajectory of Palantir, you know this isn't just hype. Palantir is actually turning heads with real performance, not just promises. It's one of the most powerful AI companies on earth. CEO Alex Karp said it best at the most recent earnings call. He said, "We are at the way beginning of our trajectory. We are at the beginning of a revolution, and we plan to be a cornerstone, if not the cornerstone company, and driving this revolution in the US over the next 3 to 5 years. In my opinion, Palantir continues to be the biggest and most obvious wealth builder when you're looking out over the next 5 years. They offer AI software which institutions integrate into their operations to see far better results all across the board. We know these companies are extremely happy because they continue to extend their contracts with Palantir. This is not a typical AI company. This is a software company that is reshaping how entire industry operates. And the market is just starting to realize that. And we're just starting to see the real upside associated with all of that. Technology tends to build in cycles, with each cycle building on top of the last. For example, there were around 1 million computers in the 1970s, but they were just so big and expensive that only the biggest institutions could afford them. Fast forward to the early 2000s, and there were over 1 billion computers sitting in homes and offices around the world. This same trend is happening in artificial intelligence right now. The first large language models required billions of dollars to train, fine-tune, and run. But ever since OpenAI released ChatGPT over a couple of years ago, the total cost for these large language models has been falling dramatically. Just take a look at what happened recently with this new DeepSeek large language model that just came out, which supposedly was created for a little over $5 million. Pennies on the dollar. But enough of that, let's dive into the juicy stuff. That's right, Palantir's quarterly earnings. Palantir recorded record earnings for the quarter of $828 million, which is up by 14% quarter over quarter, but when you look at year over year, it's up by astonishing 36%. That right there is solid overall growth, but things really get interesting when we break the revenue down by segment. Palantir's U.S. commercial revenue reported at $214 million for the quarter, which is up by 20% quarter over quarter, but it's up by an astonishing 64% year over year, thanks to two key metrics that, in my opinion, all Palantir shareholders should care about. First of all, their U.S. commercial customer count grew to 382, which is up by 19% quarter over quarter, and year over year it's up by 73%. And secondly, their net dollar retention rate was 120% for the quarter, which is the highest it's been in the last 2.5 years. 73% more customers means a lot more than just revenue. It also means new use cases for Palantir software, which means they can build even more out-of-the-box solutions to convert even more customers in the future. So there you have it, ladies and gentlemen. Those are the two stocks that are super solid plays that I believe will do very well coming into this environment. Now, that doesn't mean to try to jump on a horse that's running by you. What it does mean, though, is when you see pullbacks, when you see good deals, it may be time to jump on those. Now, I'm not a financial advisor, so I always recommend you do your own due diligence and stay informed, and that you're also being picky and strategic about when you're entering these plays. If you want to see how you can 10x your money in just a week's time, check out this video I made right here. And if you want to check out the video that YouTube thinks that you would enjoy the most, check out that video right there. Thank you for watching, guys. That's gonna be it for this video. If you enjoyed it and you think I earned it, smash that like button and be sure to subscribe for future content just like this one. Peace.